Hey everybody, welcome back to the channel. For today's video, we are going to be talking about how to cash out refinance. So we're going to be turning your home's equity into tax-free cash. But before we can actually turn your home into cash, we need to first define the word equity. Everything depends on that word equity. So what is it? Well, equity is your home's value minus the remaining mortgage you have outstanding. For example, if your home is worth $300,000 and you owe $125,000 on your current mortgage, then you have approximately $175,000 in potential equity. So this does not mean that that's how much money you would get back on a cash out refinance, because most banks will lend you up to 80% of your home's value. This is also known as LTV, or loan to value. So you may be thinking, how do I determine my home's value? Well, research recent home sales in your neighborhood, and you can use sites like Realtor.com, Zillow, Trulia, and the MLS if you have access to it. Now, these sites are only going to give you an estimate, but ultimately there will have to be an appraisal ordered by your lender that will determine your home's value. So let's discuss, how do you actually turn your home's equity into cold hard cash? Well, you can start by reaching out to your current lender and ask them about their cash out refi options. Or you can do a little research and contact other lenders and have them compete for your services. I say this because I am not a fan of the big box banks, the Wells Fargo's, the Bank of America's of the world. For one, the rates are generally higher and their refinances can take several months. I like to first go to local credit unions and then go from there. And also online banks like your loan depots. Those are great lenders as well. So keep that in mind. So what should I be looking for in a lender? Well, the big three high ticket items are your closing costs, how many points, and how many days to close. So what are closing costs? Well, most lenders are going to charge you a bare minimum of 1% of your new loan amount. So if your new loan amount is $300,000 or $250,000, they're going to charge you 1% of that. So it'll be either $3,000 or $2,500, whatever your actual loan amount is. 1% of that plus. Some of those pluses include your title company, your closing attorneys, your reserves for property taxes, homeowners insurance, all that good stuff is going to be included in your closing costs. So what about points? How many points for lower rates? So what are points? Well, in the banking world, points are really called basis points. So what that is how much a lender would charge you to get a lower rate. For example, if you are getting a 3.5% rate, the bank may say, I'm going to charge you 1% or 1 basis point for that 3.5% interest rate. A basis point equals 1% of the loan. For every point that they charge you, that's an additional percent of the loan. So if they charge you 2 points, that's 2%. If they charge you 3 points, that's 3% of the loan that will be ultimately rolled into closing costs that will cost you more money on the front end of the loan. So keep that in mind. Also, how many days to close? Again, let me reiterate how many days to close, because most big box banks can take a very long time to close, up to 90 days. Or longer, 6 months. I've even had some tell me it's going to take 6 months to close. Again, try to stick with your smaller local banks or your online lenders like your loan depots of the world, or even your credit unions. I always start with the credit union first. So how much does a cash out refinance actually cost me out of pocket? Well, the good news is the only cost you should have to pay out of pocket is for the actual appraisal itself, which usually runs between $400 and $500. All other closing costs should be rolled back into the loan. So, just to get started, what are the actual documents that I need to start gathering if I am thinking about that cash out refinance? Well, the what you're going to need is pretty straightforward. Your two most recent pay stubs, 2 months worth of bank statements, last 2 years W-2s for each borrower. So if it's more than one borrower, you'll need all of that for each borrower. Most recent mortgage statement of your current lender, a homeowner's insurance declaration page so they can go ahead and start the process. Your lender will want to see that so they can get their name put in on as the lien holder. HOA statement, if necessary. If you live in an HOA community, then you want to provide them with your HOA statement because all that's going to come into effect whenever they actually calculate your loan. The lender at this point will now want to pull your credit, and this will be a hard pull. So keep that in mind as you're shopping lenders. You don't want everybody to pull your credit because it does count as a hard pull and it can negatively affect your credit. So please keep that in mind. Now let's talk about the big one, the appraisal. Everything depends on the appraisal. As soon as the appraisal comes back, then you will be able to determine your home's value and have a ballpark of how much cash you will be getting at the end of the actual closing. If the appraisal is low, then you can either appeal or wait a few more months before trying again. And I say that because I have an interesting story here. I recently did a cash out refinance, and the appraisal came in super low. I don't know why they use older sales comps. So I went and I did an appeal, but it failed. They would not change my actual appraisal. So what I did was I canceled out that lender and I went to another lender 3 weeks later, ordered a new appraisal, and it came back $60,000 higher. So just keep that in mind. Sometimes the appraisal, unfortunately, can be in the eye of the beholder. So just remember that. Now the fun stuff. The appraisal came in right where we needed it to. Now let's get to the actual cash. How do I know how much cash I'm getting after that appraisal comes back? Well, the appraised home value multiplied by 80% equals what's called, remember the term, LTV, or loan to value. Why is that important? Because the loan to value minus your remaining mortgage amount and closing costs equals cash to your bank account. So in our example that we spoke about earlier, we said our appraised value came back at $300,000. But remember, the lender is only going to give you up to 80% of that appraised value. So if we multiply the 300,000, our appraised value, times what the lender's max amount allowed is 80%, that gives us a total of $240,000 loan to value. But remember, in our example, we still have $125,000 remaining on our existing mortgage that needs to be paid off, plus any closing costs that this new lender will charge us, because all closing costs gets rolled into the loan. You don't pay for closing costs out of pocket. All that gets rolled into the existing loan. So if we say our $125,000, which is our existing mortgage that needs to be paid off, plus our closing cost of $8,000, then we will see that we have a total of $133,000 that needs to be paid off or included in our mortgage. So if we subtract $240,000 minus $133,000, that will give us $107,000 cash out refinance. So that is how much money that you would actually be getting back from your cash out refinance. $107,000. But here's the good news. A tax-free cash out refinance. Remember, cash out refis are completely tax-free. Why, you may ask? Because you do not get taxed on debt. You can use this cash for whatever you like. For example, paying off debt or even starting a new business that you have been putting off for the last 3 years. Now you have this available cash to kind of give you a head start in life. All right. So thank you so much for joining today's video. I hope that you enjoyed it and got something out of it. Please remember to smash that like button and subscribe. And please share this video to whomever you think may benefit from it. But before we close out, I wanted to highlight some frequently asked questions that I get a lot by people that I just randomly talk to about cash out refinances. The first one, do I have to take out the full amount for a cash out refinance? And the simple answer is no. Remember, the bank or your lender will allow you to take out up to 80%. But you may not need that much, or the mortgage may be too high if you take out that much. You can decide how much you want to take out at that point. How do I know how much the closing costs will be? Well, this is one of the trickier ones because every single lender is different. You can expect to pay, depending on the loan size, I like to say anywhere between $5,000 to $10,000 in closing costs that will be rolled into the loan. But every single lender is different. So make sure you do your research and shop your lender. Will I now have two separate mortgages? It's a good thing. No, a cash out refinance is a new mortgage in itself, and you cancel out or pay off the old mortgage. This is not a home equity line of credit. We're going to do another video on a home equity line of credit, which is a second mortgage versus a cash out refinance. But no, you will only have one mortgage. So how do I know if I qualify? Well, that's going to be up to you and your lender. Everybody's going to be running. You're going to start hearing a lot of big words like debt to income ratio. What is that? What's my credit score? There's different things that you can go ahead and start checking now to make sure that you have certain qualifications to get pre-approved during the actual cash out refinance. And the good thing about it is a lot of these pre-approvals come before they can pull your credit as well. So which lender should I use? Again, research. Always start with your local banks, your local lenders. I always like to start with credit unions, but don't forget about those online lenders like your Loan Depot. And lastly, how often can I do a cash out refinance? The beautiful thing is you can do a cash out refinance as often as you like, as long as you have the equity in your house to get the actual cash with the refinance. All right. So thank you all so much for joining. Again, please like and share and subscribe to our channel because remember, here at Success Finances, our goal is to share the knowledge, spread the wealth, and ultimately help you build a legacy one investment at a time. Thank you so much. Have a blessed night. Bye-bye.